Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it. It's generally related to three different topics: wealth building, commodities, and/or financial topics. Dive in, let's take a look, see what people are sharing. If you want to follow me at @Finance, and if you want to join our community, finding-value.com. Join us if you'd like to research companies, research sectors. If you're curious on what I'm doing to find my investments, the technical analysis portion of it, there's a lot of trainings on the website that describe my approach. The three pillars, which is technical analysis, market conditions, and ratios. So let's dive in. Here we go. Sam Gatling. It says, this is what the principle of polarity is all about right here. The market has absorbed all of the baggies from the 2014 peak. That level of former resistance is now flipping into support. This is the New York Stock Exchange Oil and Gas Index, XOI. So what he is saying is that the bag holders that were over here, which is acting as former resistance, as you go through, it hits resistance, resistance, resistance. This is selling pressure from these areas through here and here. As we get through those sellers, we're going to use support here. So you get new, fresh people. They start to buy the stock. We break out of it, come back and do a retest of the breakout. And I think we could see a big move higher in New York Stock Exchange Oil and Gas Index. And I'm not investing in the indexes. I've got my own companies, the ones that have the big leverage. They sell products that I want to be included in. Some of these they're more natural gas heavy, or some of them are more heavy oil heavy, or the location of natural gas is also a big deal. So I think we are hopefully at the beginning of a move in oil and gas equities. Now, the natural gas equities, some of them they've ripped. Um, some of them are up over 100% since beginning of 2024, early portion of 2024. But the oil names and some of the energy service names are ridiculously cheap. Real good entry points right now. Compounding quality, be radically open-minded. So here's Jeff Bezos. He says, anybody who doesn't change their mind a lot is dramatically underestimating the complexity of the world that we live in. Jeff Bezos. And, you should change your opinions as you learn about more data. But if in these big cycles, I don't see a reason to be flipping in and out in terms of bullish, bearish. You play a bullish game in a bullish mindset is the only way to play it. You can't play a bearish mindset in a bullish regime. And vice versa, you can't be bullish when the macro picture is bearish necessarily. But the bulls generally win if you take a long-term approach. But he's probably talking about the business, navigating the business, and things that you have to change and try to see what works in the market. HFI research says sleepwalking into a freight train, and he's talking about oil. Without a Q4 ramp in production, Q1 and Q2 of the following year usually exhibit very weak production profiles. So if we didn't ramp in Q4 2024 oil production, we're more than likely going to see a weak Q1 and Q2 of 2025. Uranium Insider, we've got all this uranium buying pressure occurring January 2nd. So the buying pressure is from this. The halting of the joint venture Inca isn't trivial. This is possibly the best ISR project in the world. Hopefully we'll have further reasoning for this decision soon, but not holding my breath. Inkai is the thick blue segment production expected into the 2050s. So it's this blue section down here that we are talking about. I'll go over a little bit more of what is going on here potentially with another post a little bit down below. But this is the summary production profile. If you notice, we were supposed to get a huge jump in production right at 2024, 2025. This was the increase, and we're supposed to peak out in 2025 and then ramp lower. I don't know if we got some of these production ramps. Kazatomprom, which is down here in the blue, they've been having problems sourcing. I guess it's some sort of acid, and Cameco, they're having issues too. Everyone's having issues in producing uranium, apparently. Tavi says if the US dollar is indeed nearing a critical juncture and is in the process of potentially devaluing against other currencies, which is our high conviction thesis, it's essential to consider another significant trend that may emerge: the underperformance of US equities relative to global markets. In my view, this will be one of the defining trends of the coming years. The current concentration of capital flows into US assets is unprecedented and, in my opinion, entirely unsustainable. Historically, as the US dollar weakens, capital tends to flow back into global markets, which today remains deeply undervalued in relative terms. Notably, there's a strong correlation between the DXY index and the relative performance of the S&P 500 compared to the MSCI World Index, excluding the US, reinforcing this potential shift. So again, this is the DXY index. That's what I've been watching. And we've gotten a lot of strength over here recently. And then the S&P 500 relative to MSCI World Index, excluding the US. So they are correlated together. When we see the dollar drop, the DXY, I think we'll see a rotation of money away from US equities and towards commodities, precious metals, and emerging markets. Where do you think I'm positioned for? I buy that stuff at the top here, and then you sell at the bottoms here. So I think we've got an entire decade of absolute nosebleed returns coming ahead of us. And I don't know if nosebleed is good. We'll just say the portfolio could be green for a lot of years when this finally rolls over. Now, a lot of people, what they're going to be is like, it hasn't rolled over. We haven't done it. Yeah, time out. Like, you got to calm down, number one. Number two, this takes time. It takes time for these rollovers. They're not immediate. It might take a couple of years. And we've been in it for a couple of years. 2020 was the bottom, and now we're going to start to get some momentum. So that momentum will build. People will realize that there's a change, the linear thinkers, and then the money will flow in. It just takes time. Then back. Another one from HFI Research. Except for 2020, U.S. oil production is on track for the weakest growth since the beginning of the U.S. shale revolution. This is the index at 100. We are below, and we have the weakest growth in 2024 versus the other years. This year was a burner here. 2018 was an absolute burner of a growth year. Another one from HFI says, I'll leave this here. The IEA's 2025 oil market balance forecast. For quarter one, we won't even be remotely close to what they are projecting here. I think it's completely off. So this is going to be a fun year, and I think that a lot of these predictions are going to show out and prove to be wrong. I did do an interview on Triangle Investor. If you want to check that out, definitely hit the Twitter up here. Christine Guerrero says 40% of companies reported that their oil production was down year over year in the Dallas Fed survey. The EIA isn't accurately modeling these companies. That's the data that we want to be looking at. So I think a lot of this stuff is, we'll just say that the predictions will be way off in a positive way for oil to go higher. Dow Jones versus oil and oil versus Dow Jones. So this is what I'm seeing from a fractal perspective. The fractal is we get a peak, got a peak in 2020. We pull down, that's what the white downtrend, we break that white downtrend, we do a return move back to kind of the upper level here of this ratio. So big move up, pull down, hit it, and then we compressed all the way down to 2008. I think a similar fractal is basically forming. We even have a shoulder, a head, and a shoulder forming. The circle is where I think the circle is. The blue line here is the white line here. So the fractal is very similar, and if it plays out where we pull downward, much like we did all the way to 2008, if we pull downward to here, oil is going to moonshot if it does do that. Now, I'm not stating that it has to do that. I'm saying if it does do that, you are looking at a massive outperformance of crude oil versus the Dow Jones. And I'm sure it's going to be a combination of crude oil going up and the Dow Jones Industrial going down. But that's what I'm seeing with this fractal here and the setup, which is very similar to the 2008 setup. Switching it around and flipping it around. So flipping it where crude oil divided by Dow Jones to show you guys a different outlook. We've got a 1, 2, 3 hump consolidation, false breakdown in 2020. This is clear as day. We break out of this pattern and we have been consolidating again in another falling wedge, which is a bullish formation. A lot of the times I see a big kind of snake coming up and then it's got the flag pattern that comes on down, the pennant or flag pattern. And this could, if we can get a break here, it's going to look really good for oil. Break wave. It says new year, same old Chinese deflation pain. The 10-year yield on Chinese bonds drop at a new low. So what is causing this? A lot of people are probably confused. What's causing it is a demographic that doesn't exist in terms of home buying years in the same size as other years. So what you like to see is a larger demographic of more people coming into home buying years to loan more money into the system, which is inflationary. Their problem is they don't have the demographic coming into home buying years. It's smaller, which means they're going to hit deflation, much like Japan. I don't know how they're going to fix this because when you have less people to sell to and you have less businesses being created, less loans in the system, which is loans create money. If you have less, you're going to get less loans and you're going to get more deflation. Yeah, that's where they're at. Rock bottom entries. The TSX Venture Index signals a major bull run lies ahead for junior resource companies in 2025. Shoulder, head, shoulders, an inverted shoulder, head, shoulder. Ready to rip. Now, we haven't broken out of the neckline yet, but this looks like a really good setup for a potential break. And that is the S&P TSX Venture Composite Index, if you guys want to know what that is. This is oil versus gold and gold versus oil, an update, because it's such an important move that could be occurring right now. So we have a squeeze here, a breakout, and then we've got another squeeze, and this is gold. This is crude oil versus gold. If we zoom in on the right-hand side, we're getting real close to a breakout here for crude oil to outperform gold. I know a lot of people are not looking at this. I am, and I think we are close here, guys. Now, does it mean that we will immediately break? That does nothing about timeline. It has everything to do with breaking these, we'll call it psychological patterns that people put on this. Looks good. Now here is it reversed. This is gold to oil ratio. Shoulder, head, shoulder. And if we zoom in on the right shoulder here, breakdown. So this could be the beginning of a move where crude oil begins to outperform gold. Gold could consolidate sideways, or gold could continue higher, but we could see an outperformance of crude oil for a little bit. So we're at the beginning stages of a potential crude oil outperformance against gold, against the Dow, against S&P 500, and these other various asset classes. Warren Buffett says, as an investor, you'll love volatility. You love the idea of wild swings because it means more things are going to get mispriced, like oil. Nostradamus says, is this our cigar lake moment? So Cameco said Thursday that its joint venture with Kazatomprom, joint venture Inkai, suspended uranium production operations as of Wednesday. The decision was made after the joint venture Inca failed to receive an extension to submit update project for uranium deposit development documentation to Kazakhstan's Ministry of Energy by the year-end deadline. Cameco, which holds a 40% stake in the joint venture, said it previously received information from the joint venture Inca and Kazatomprom that the process to submit the update project documentation was underway and a positive outcome was expected. And the reports from December 26 did not mention of a production suspension being a risk in relation to this process. Cameco said it will be seeking further clarification and its potential impacts on production and financials for 25 and 26 and what it can do to help Kazatomprom and joint venture Inca restart mining operations. So that might be one of the trigger points of why everyone is jumping on the uranium bandwagon here. Potentially. Went down, CCJ. So we were disappointed and surprised by this unexpected suspension, and we will be seeking further clarification on how this transpired, as well as the potential 25-26 production financial impact. Everything is just fire fine. Investment wisdom: if you make yourself a very reliable person and stay reliable all your life, faithfully doing whatever you engage to do, it will be very hard for you to fail at anything you want, says Charlie Munger. JC, something is erupting in precious metals. The action is extraordinary, with the dollar going parabolic. It feels like silver could surge $10 an ounce in a matter of days, at which point it will still not reflect the 400 million ounce of deficits over the past 24 months and growing. Looks like people are getting pretty bullish here on silver. A4 Alpha, this guy talks a lot about energy. TMF, major banks realize what will happen as we lack energy investment. Canada offers this investment and stocks paying out handsome free cash flow. Many undervalued more than 50 to 70% and leveraging USD strength. Will look to unwind my own leverage employed in 26-27 as rates fall. Thank you, and that is his opinion there. ESG, EIA comparative inventory analysis with data through 1/2/2025. The total commercial stocks, excluding other oils built by 12 million barrels week over week, implies a WTI fair value price of $85 a barrel. It is $12 undervalued from the current market price using commercial oil inventories. And we are about one standard deviation or so undervalued from fair value. And the way you read this is you go straight up, and your fair value is about $85 going across here. And that's what we've got for today, guys. So give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. We've got that special coupon code special. It is still active. It won't be active for much longer, so I would jump on that. 50% off the first month, larger discount on the yearly membership. And keep in mind, we have a Saturday question and answer session at 7 a.m. coming up this weekend. All right, guys, we'll catch you later. This is Finding Value.